2, 1.
Hello, everyone, and welcome to the third episode of the DEA Tech Tuesday. Are you interested in technology? Do you want to learn about code? Are you looking for a place to nerd your inner nerd? This is for you because you think tech is fun. At the Digital Euro Association, we talk a lot about CBDCs, stablecoins, monetary economics, and monetary politics. And this format is dedicated to those who want to have a techie conversation. If you like this format, please like and share it with your network and make sure to subscribe to our channel to receive our content. I'd like to start by thanking our supporting members and say that at the end of this episode, we will have time for questions from the audience, and we will use the Slido to collect them. So please access slide.do and use the code 2828 or scan this QR code to access directly. I'm here today with my colleague Valentin, who will introduce our guests.
Thanks, Tamara, and hello, everyone. So excited to have another episode of the Techie Tuesday. I have an inner nerd, and I like to nurture it. And I'm thrilled to be here, joined by Victor, Ammer, and Felix Sidokhine. May I kindly ask you to introduce yourself? Victor, you're smiling so nicely. Maybe you go ahead. Thanks for being here.
Sure. Well, I'm a CEO and founder of Ammer Group, which is a small group of companies. We have several regulated ones, a Swiss asset manager and a German crypto custodian. And actually, we focus a lot on technology and the safekeeping of the private keys, both from the regulated side, but also from the technology side. I myself, and actually I'm not a techie by at least by education. I'm techie by passion. So I studied law and economics, did some mistakes in my life, worked in consulting, venture capital, private equity, was fairly early as a founder though. So I spent some time with Telegram, and at some point I discovered the passion for digital assets, right? With the focus of actually how to do this, secure, easy, convenient for everyone. So that's something that we focus a lot within our ecosystem. Well, Felix is our CTO. As we joke around, I have the happy face because I have to sell. Felix has the sad face because he has to execute. Right? But Felix, why don't you say a few words about yourself?
So, as it's been said, I'm the CTO at Ammer Group. My background, I'm actually a mathematician, so I did my master's in mathematics. Unfortunately, mathematics is not exactly a vocation, so you end up being a developer. I worked mostly in developing tools for the financial industry, so capital markets, banking, and custody specifically at my last mandate. It was more in consulting roles, which also gave me a very good view of how finance works from the inside. And that's one of the reasons why I work at Ammer Group and I bring that expertise to the table.
Yeah.
Perfect. Awesome. Yeah, thank you so much for this introduction. Let's just dive in. You brought a product that you want to introduce, and we asked you to introduce, and we hope to dive deep into the technology today. Yeah, just go ahead. What did you bring for us today?
As much as we can within a kind of very short, limited time frame. I mean, a lot of people actually know us or know our product from the card, Ammer Card, which is a hardware wallet. Well, Tamara has hers as well, exactly. But this actually, it's one of our products. Is definitely one of my favorite ones because it's simple, it's handy, it's physical, right? But for us, it's actually kind of a key to the entire ecosystem, and we're happy to share more. We did a short overview of the challenges that we had, of the problems that we wanted to solve, and actually of the possible solutions with some pros and cons. If we will have time, we'll also do a live demo, and then hopefully we'll have a room for questions. So I'll start with the first challenge. This is sharing the screen.
The CTO jumps in. and heads.
Exactly. All right.
Good teamwork.
You able to see it, guys?
Yes.
Yes.
Okay.
Mm-hmm.
All right. So, well, what was the challenge that I was presenting to Felix and now to entire tech team is actually how to make the financial transactions easy, fast, and more secure. Ideally using Web3, right? I'm a big fan of blockchain as a technology. I think it's a great technology with a lot of use cases, and payments or financial transactions is one of the, let's say, preeminent ones. So what were the requirements from my side? And I'll start from the business ones, right? Like in a startup bootstrap environment, cost is always a factor, right? So it should be not expensive, right? It should has a fast go-to-market, so we cannot spend, specifically in this dynamic market, we cannot spend years and years of development in order to try things out. So the whole approach should be really build an MVP, and from the best practices of Silicon Valley, MVP shouldn't take more than a month, right? And that's kind of the the limitations that I've put on Felix is, okay, show me something that works fairly quick and fairly simple, and not with a billion budget. And because I'm a lawyer by background, and I did spend a lot of time in compliance, ML, etc. So it should be at least compliant with existing laws and regulations, and ideally be prepared for something that is coming in the next years. So from the functional side, something that we discussed a lot. I think there are use cases and pros and cons both for self-hosted and hosted wallets. I'm a big believer of not your keys, not your coins, but I fully understand that there are institutional use cases where you have to provide custody solutions, or when you need a custody infrastructure. I think there is no one-fits-it-all approach to blockchains, so it should support multiple chains. If we speak about payments, you should be able to pay in-store, online, in the messenger, so basically in every environment that you spend time in. And definitely it should be easy to integrate in the existing solutions. It should be easy to build on top of that. So it should be kind of plug and play, and yeah. So what are the product components that we looked into? At least I, from the business side, it was, okay, we should have a wallet for users. We should have a wallet for merchants. Basically, it should be mobile friendly, right? So it should have a mobile applications on iOS, Android. The software, the point of sales should have a software component in it, because we don't want to create a point of sales hardware. It should rather be, you should be able to use every smartphone as a point of sales, and should be easily adaptable with the existing Android POS. We should have a ledger of some sort to track the transaction activity, and the merchant should have a management platform to manage the assets, etc. So tech components.
Sure. So based on these requirements, we had to look, first of all, into hardware, which also intersects a little bit with key storage, and that's something we will come back onto later. We needed to understand what kind of database we want in order to keep track of everything that's going on. We had to look into hosting, because essentially you can start off with a cloud solution and then move on to self-hosted, or the other way around. And also we needed a very simple architecture, or at least an architecture on top of which you can scale very quickly and you can adapt. So these are the things that were basically the tech constraints that I had to look into. So let's go over the self-hosted wallets, right? The self-hosted wallets is basically the card. And why do we want a self-hosted wallet? Again, this comes a little bit from a business challenge, because a lot of the target audience today in crypto wants to have a wallet which is their own, the not your keys, not your coins thesis. On the other side, it also allows you to have low customer acquisition costs, because one of the things that a lot of people underestimate is that if you're building out a custody platform, your biggest cost isn't just going to be technology. It's also going to be all the processes behind it. So for example, onboarding a client can easily run you maybe 200 to 300 euros, and sometimes even more, because you have all those AML and KYC processes that come into place. It's also a question of digital distribution channel, because software wallets, you download them, you use them, everyone is happy. And the other and final thing, which is probably really interesting to the DEA case, is that one of the things that it enables you to have is some form of digital cash. So one of the things that you've seen probably at the last DEA meetup with the cards was essentially using them as cash, not as a card, not as a credit card. Nothing was custody. And that's a CBDC use case, which we can elaborate on later. So what was the emphasis on? The first thing is you have to protect users from unauthorized use, right? If somebody steals your card, you have to make sure that no one can use your money. Then you have durability and form factor. So of course, everyone loves USB wallets, but one of the things is that they have a lot of components, right? If you break the USB stick, if you sit on it, if you spill, if you put water on it, that's it. It's garbage. You can't really do much about it. Also, it's a single user story, right? You won't really have multiple users using a single wallet. Finally, the biggest emphasis is also how can we use this? So as we said, there's the case for digital cash, but there's also the story of ticketing, loyalty points, paying for goods and services. So it's a very specific end user use case. The implementations which are out there on the market, essentially you have the USB stick form, which are very well known. It's Ledger and Trezor. Of course, some of them implemented Bluetooth at this point. Then you have the smart card form factor, which is essentially the road we took, which is the super resistant at this point. So I've spilled water on my card. I've given it to my kid. He bent it and it still works. And that's really amazing. And then you also have the smartphone application form factor, which usually leverages the security features of the smartphones, which are known as TPM modules. Unfortunately, that's also not exactly bulletproof because Apple devices are more secure. Android devices, unfortunately, mileage varies.
Yeah, and you just have much more attack vectors on a smartphone, right? So you can click a phishing link. A smartphone is basically online 24/7. So from a vulnerability perspective, smartphone much more vulnerable than a smart card, for example.
So as we've said, one of the solutions, and at least the solution that we've looked into, was specifically the smart card. And that's going to be part of the demonstration today, where we'll show you how everything ties in, because the demonstration is really going to be, okay, as a merchant, you're going to have an account with a custodian, which is Trustedy. As a customer, you will have an unhosted wallet, which is the card, and we will show you the entire life cycle of how all these systems interoperate and allow you basically to transact. And this is going to be our cool feature of the day. So what are the pros and cons, right? What is great with the card is that you have this whole NFC connectivity. You can use it with smartphones. You can use it with terminals. The key drawbacks is that wallet backup is actually fairly tricky. And from a tech perspective, it's actually very difficult to get it right. And then you have the distribution channel, which is more of a business story for us, because you have to produce the cards, you have to you have to find your vendor, you have to print them. There's basically a lot of nooks and crannies involved in order to get them to market. So what exactly are hosted wallets, right? We hear a lot of people talking about it, and basically hosted wallets is really just custody. That's what it is. That's how it works. Why do we want hosted wallets? So of course, the not your keys, not your coins thesis is great. But if you're a merchant, you have a multi-user environment. You might have accountants, you have salespeople, you have the managing director who needs to do things. So in that context, you definitely need a system which allows you to do so. And building it on top of non-custody solutions is usually very, very hard, if not almost impossible. Also, you need to store a lot of additional data about the transactions. And merchants, they're usually more comfortable when somebody holds the keys for them, right? So think about it this way. As a merchant, you get a lot of cash in your register. At the same time, you're not bringing this cash home, right? You're bringing it to a bank. So basically, you're already used to a process where someone is bearing that responsibility of managing your assets, which essentially is something which we need to replicate in order for this to be acceptable.
Yeah, and you just have, let's say, in an institutional context, right, you have multiple roles, right? You may have an auditor, you may have an accountant, you may have other managing directors who you have risk and compliance and all that. So as much as I like a card, right, it's not enough just to have a self-unhosted wallet, right? There you actually need multiple approvers, et cetera, et cetera.
So the emphasis here is actually a little bit different, right? You have the operational security and audit. What that basically means is that if you're running a custody business, you need to make sure that the cryptographic material, which is access to the private key, is properly managed. And that's something we will come back onto a little bit later. And it's a fiduciary business, right? Because you're administering the assets of a third party. So you have to make sure that you have all these processes in place. Then you have to account for disaster management. What do you do if the entire system goes down? How do you back up the keys? How do you make sure that every one of your customers can regain access to the fund? Also, it's a treasury-oriented feature, right? You need reporting, you need omnibus accounts, you need position management and liquidation, you need payments acquiring, you might even have tokenizations like a lot of platforms are doing. But you also need it to be simple and usable with smartphones because that's what people love. So if you look, for example, at, I think it's Stripe, or one of those solutions which merchants love. One of the things that you can do as a merchant is you can acquire payments just using a smartphone and a small terminal, right? There's the whole app component.
Yeah, actually, the whole treasury and custody feature is quite helpful because, and Felix was actually developing custody systems before, traditional custody systems. So he brought in his entire kind of custody expertise, into that.
So what are the ways you can secure keys? There's quite a few solutions out there on the market. The first one are HSMs. HSMs stand for hardware security modules. Usually think of them as specialized servers sold to you by a vendor. There's quite a few of them. There's Utimaco, there's Securosis, there's Thales. So we actually went with Securosis because Securosis helped us solve a very specific problem, which we will see next, which is really how do you manage access to the HSM? The other approach, which is also used by quite a few custody providers, are TPMs. So TPMs work a little bit differently. They're essentially just either an additional chip or a service provided by a service provider, which contains a master encryption key, which is used to make sure that the data is encrypted on the disks. And finally, you have MPC, which is fairly new. Well, okay, fairly new being relative. I think it's been what, 3 to 5 years it's been on the market. And the goal there is that you have a distributed key generation and signature scheme. So all of these approaches have equal, I'd say, advantages and disadvantages. But one of the issues is really that they're tools to solve that problem. But then you will have a different problem, which is really how do you make sure that the right people don't end up keeping their password to that private key under their desk? How do you make sure that it works? And this is probably one of the taboo questions which no one really in the custody space addresses. So the HSMs have why we've chosen it, right? Like Victor said, one of the business requirements was to support multiple chains. And multiple chains usually means you have to support multiple cryptographic algorithms. Some chains use RSA, some chains use elliptic, some chains use EDDSA. And unfortunately, unless you're using a TPM or an HSM, you can't really have that wide range of support. Then you have the on-device key access workflow. So that's what Securosis really brought in for us. They made sure that we had a quorum requirement which we could respect. So for example, in the custody business, one of the things that you want is for every outgoing transaction for 2 managing directors to sign it. But what does it mean to sign? Basically to approve it. And that's something which we had to work very hard on. And the other huge advantage for us is that one of the biggest requirements is you want to do account segregation for your customers. You want to make sure that there's not just one huge pool of money where everything is dropped in together. So in this case, 1 key equals 1 wallet.
Yeah, and both from the regular, like security perspective, but also regulatory perspective, it makes things much easier, right? Again, we did quite a lot of analysis on the HSM versus MPC versus other possibilities, right? And what I liked about HSMs, and especially they're quite good known in the banking industry, right? So Securities, I think they secure the financial transactions of the Swiss interbank clearing. So actually they're used in all the banks a bit differently than we use them. but still they've been out there for the last, whatever, 10 years, maybe more, maybe 20 years, right? In cryptography, specifically, new is not necessarily good, right? So it's much better to rely on, let's say, schemes, signature schemes, and algorithms that isn't out there for many years, and it has been battle tested by the community. But there are also some drawbacks with it.
So the biggest drawbacks with HSMs is that, okay, you have, like I mentioned, the key enforcement policies, but at the same time, you need to figure out how do you make sure that the MD's keys, who's basically signing or approving a transaction are secure. And ironically, part of the story of how the non-custodial wallet was born, it became an extension of the work that we had to do specifically to provide access cards to the managing directors in the custody solution. The second part, which is actually also very taboo to talk about, is that it's very complicated to do proper backups. And especially vendor-locked backups are usually a bit of a risk, right? Even though a vendor could be there for 10, 20 years, unfortunately, if you end up with a vendor-locked backup and the vendor suddenly goes out of business, you do have a bit of a risk that you might not be able to restore the funds. The last part, which also is a little bit tricky, is that you can't really set up an automated execution of instructions which are coming in, because at this point you need a managing director to approve everything, or two managing directors, which does make it a little bit cumbersome, but in a regulated environment, that might actually be a good thing.
Yeah, that would be a better thing in the case of FTX, definitely. All right, so let's think about architecture.
So what were the design considerations? First of all, we had business logic centric approaches to microservices. We didn't try to build out, a microservices architecture for the sake of it. We basically segregated specific business life cycles into those pieces. Then we had to make sure that we could be scalable. So that applied for databases and authentication, because one of the things that we've noticed, and one of the mistakes that we try to avoid, is that a lot of startups, they try to go for solutions that are already built for scale, for huge projects. Whereas us, or any custody business, you start with a fairly limited client base. So you need solutions which can scale, but which are not necessarily already super scalable. Also, we had to choose simple frameworks, right? Because, okay, we built a custody system. Who's going to use that custody system? Basically, we're talking banks, we're talking family offices, we're talking, asset managers. But all of these people already have an established technical framework. And usually Java is fairly popular. Of course, some people deviate, but Java EE has been around in the industry for many, many years, and that's why we picked it. As I mentioned before, we also have to make sure that we're compatible both with cloud and bare metal, because you go see a bank, they say, okay, we want to do crypto custody. We want to run customer accounts, but they already have an infrastructure. So you have to be super compatible with everything that's out there on the market. One of the other very, very important things is that, first of all, you have to make sure that the administration resources are minimal so that the system can run on itself without 200 people supervising it from a technical standpoint. We're not talking about the business standpoint at this point. And that's also something which, when you're building custody, right, you have to make sure that you have that. Why? Custody is actually not as marginal as people think. What I mean by that, there's not as much revenue. So if you look right now at the pricing, actually Coinbase offers custody almost for free. If you have more than, I think, 100,000 or 1 million in balances, they'll give you a custody service, no charge. So how do you stay competitive in that environment? Only by making sure that the system it can run by itself or with minimal help. The other part is that, okay, you've implemented it at a bank, but then they're going to build things around it. So you also have to make sure that you remain open to other programming languages and you give them those tools to build on top of it. So I've mentioned that we are in a fight for price. We have to be cost efficient. And unfortunately, not all great choices, especially when you're talking about efficient tech, are cool choices. Often enough, you have to go back, you have to choose stuff that's been tried and proven, and that makes a huge difference. So
we did some experimentation with the cool new stuff. We paid the price for this at the beginning of the whole development journey.
So I've done a little diagram, so you have an idea of how complex actually a custody system for crypto can get. And if you look, we have all those different pieces. So in red is really the part which protects secrets. So we have the TPM key store, or the smart card key store, or the HSM key store. And these are really the critical components where the secrets are kept. Then you have the data protection aspect, which is usually about users, transaction monitoring, audit logs, customer management, and then you have everything else. The idea is we went with an event-based system because it's actually fairly easy to scale. Basically, it's just every component receives a message, acts on it, forwards it to the next one, or vice versa, and so a transaction lifecycle completes. One of our biggest advantages is that we don't work with any blockchain directly, in the sense that we have a component which reads the blockchain and then it's a data transformation exercise. It basically, if we wanted to add, I don't know, Solana tomorrow, we wouldn't really have an issue. It would really be one component which we would have to write. It wouldn't really be about redeveloping an entire system. And that's also something that if you look at many different wallets, gets a little bit tricky, because often enough what you see in Web3 is that people start working directly with the blockchain. And that's a huge mistake if you have to support a lot of protocols, because then every time you add something, often enough you have to modify a lot of pieces. It might be the website, it might be the mobile app, whereas us, it's really plug and play. So Victor, for example, was at the Satoshi Roundtable conference in Dubai. He calls me and he says, listen, can we add Litecoin? No problem. Within one day, basically, we wrote the component for Litecoin, we plugged it up, no changes in the application, no changes anywhere, and suddenly everything works.
So yeah, the full story was that actually I've met the founder of Litecoin, Charlie Lee, 2 a.m. in the morning on a party. I showed him the card. He really loved that, but so like, well, Charlie, I'll get you the card, but Litecoin not yet supported. And he was kind of sad about it. So I texted Felix and said, Felix, how fast can we actually plug in Litecoin? And the next day it was there, right? So I showed it to Charlie, and then Charlie was quite astonished how fast it was, right? Without any external support of them or whatever, right? And that's, I think this is kind of crucial in today's environment. You know, you have to have the speed on the execution, right? Both on business and on technical part, because otherwise, you know, it's really hard to survive, specifically in the crypto winter.
So databases, we can talk a lot about them. We actually chose MySQL again because of that argument for scale versus can scale, right? The day that we'll have billions of users, we don't really have an issue, because one of the big secrets around MySQL is that everyone says, oh, well, it's an old database, it can't scale, it'll only support a certain amount. And then they find out that there's something called NDB cluster, for example, which is actually, you just replace the database, it's completely compatible with the MySQL API, and suddenly you get something which does 20 million updates per second. So these are the kind of arguments that we used in our development process.
And again, speaking about databases, you know, we did not in this project, but in other projects, we did quite some experimentation with Cassandra, I think, right? So again, there are a lot of funky databases out there, but again, they require a lot of resources, and they're built for scale at some point, but like you have to start small, right? You have to start small, but still kind of do the decisions that will allow you to scale later.
So what have we learned from all of this? Is that complicated setups, usually you have a lot of administration costs. Complicated technologies, you end up with very small talent pools. And force scale is not can scale. So force scale usually assumes that you're already building a huge infrastructure. And that's, for example, the case in certain banks where you have to be where you're already having a customer pool of 10 million, 20 million, 20 million customers. But you know, in most cases, your infrastructure needs to be able to grow with your business. You don't need to fall into that megalomania where you're trying to build something for 10 million users from day one, but you need to be able to get there. So of course, there's a cost to pay. You still need to invest in good developers. There's no way around this. I think everyone knows that. So there's a couple of other interesting facts, but I think I'll just omit them because everyone's excited about the demonstration.
Okay,
yeah, this we can omit. So I've mentioned the secrets protection part, which also I think I'll skip because we've discussed it. Data protection is usually, again, about proper encryption of data, proper role-based access controls. And these are things which are really more about regulation than technology at that point.
Yeah.
So what exactly did we get at the end, right? We talk about Ammer cards, we talk about non-custodial wallets, we talk about custody. Ironically, we actually got a system which is suitable for both cases. So the same backend which we built for the custody system actually supports our entire non-custodial infrastructure. The only difference being, in one case, it's the HSM that signs the transactions. In the other case, it's a smart card. So the smart cards, they're basically the device with the private keys, and they're equivalent of paper notes in that case. And the custody wallets, well, they're the equivalent of having a managed account. So we have all those swarms of microservices, each responsible for its own block and technical operation. Everything is great. And we got Ammer card.
Yeah, as I said, you know the cards, right? Security, multi-asset support, et cetera, et cetera. It has a traditional design that everyone gets, right? And understand. There are a lot of benefits associated with it, how you can use it. You can use it for payments. You can use it for gamification, ticketing. It's a wallet, right? Obviously, you also have an app, right? This is an Ammer wallet, and we're building a really cool integration that will be launched in a few days. I'll keep you posted, and I'll send you the invite to the beta version of that. So again, you can have NFTs. You can use it for conferences, for events. This is great as well, right? Because you can actually not only store your crypto, but you can also pay at the point of sales. Right, and we support both iOS and Android. So actually, you don't require a device. You actually every smartphone can be turned to point of sales. Obviously, in today's environment, you should also support web payments as well, right? So and that's kind of a cool thing that you can have a widget on your website. You type in your card number, you receive a push notification on your smartphone, you sign with the private key of the card. So it kind of replicates the 2FA side of the credit card, but it settles directly on chain. Yeah, you can try it out later, right? And Felix, why don't you show?
Yeah, so I think everyone has heard enough stories. Maybe it's time to do a little bit of a presentation.
Yeah.
Let me just move on to the laptop, which has this. Okay, let's enable screen sharing if everyone is ready. Where does this work? You need to stop sharing your screen so I can.
All right.
Okay, so everyone can see me. This is great. Share screen. So basically, this is Trustedy. Trustedy, like I said, is our custody system where you can manage your assets. So I have a test account which was created for me. I'll try to sign in. I'm sorry, I've been uninvited. Just one. Go security first. You need 2FA. For that, I need my smartphone. I need to find the authenticator. Moment. There we go. There's my magic code. Oh wait, it changed already. 863785. So this is my dashboard, right? I can see my assets. For example, I can see Bitcoin. I can click receive. I have my address. Everything is there. I have my Cello account. So for the purposes of the demo, we'll do a demonstration. And here, for example, I received my point below 2 Cello euro cents. So this really, this really is a typical dashboard. That's all that's there. Now begins the really cool part of our demonstration. So I have my card, right? This is a non-custodial card, no relationship to this system. And I have my point of sale. Basically, the point of sale is linked to this account. So think of me as a merchant, and I'm trying to sell a coffee. So unfortunately, this device cannot share its screen, which is a little bit disappointing. But can anyone see this? Probably.
Yeah.
We can see
Yes.
the input like, yeah, Tamara, sorry.
Yeah,
So,
we can see a little bit. Yeah.
yeah. So basically,
it's like this input of a calculator where I guess the like seller or like the vendor can
so
type in the
basically,
amount that he wants to invoice.
Yeah. So basically, let's say I'm going to pay some cello euros. Here's my card. I'm going to pay. Let's go with 25 cents. I don't know what I can actually buy for 25 cents, but that's a different story.
In some countries, you can actually.
Believe it or not. Wait for card. Here's my card. It says, oh, you need a PIN. My very secure PIN 1, 2, 3, 4, 5, 6. Push it. And there we see transaction success and even prints a receipt. So for all the demonstration purposes, you can scan the QR code. This transaction happened on chain. It's already in the blockchain. Now I have to write a message to our AML department, believe it or not, because we have to have someone allow this transfer. Give me half a moment.
On which blockchain is this written?
This is on Cello.
Okay.
So
the transaction goes through in like half a second on Cello.
Yeah, it's very, very quick. On Bitcoin, it would take a lot longer. On Ethereum, depends how much gas fees you want to pay. Just writing our AML department to.
Basically, meanwhile, I can show you the transaction on chain. A second.
As you can see, unfortunately, AML departments are not that quick.
Can you stop the screen sharing?
Yeah.
Okay.
So we see the transaction already showing up in the Ammer wallet transaction history, the like 13 basis point USD.
Yeah, so here, did you see my screen?
Yes.
Yeah.
So that's a transaction on the blockchain. So this is the transaction explorer, right?
Yeah.
So you see 25 cello euro. Here you go from this wallet, right?
Yeah, whichever. Now
maybe
so inside trustody. So if Victor turns off his screen sharing.
Valentin, you had a question?
I have a lot of questions. Amazing product demo, but please finish first.
Yeah.
So now, as you can see, on my screen at 1737 at 537. Wait, I think I just need to refresh. Cello USDs.
That was the cello euro, I guess.
Yeah, I think it was the cello euro. Here's my 25 cello euro cents, which are finalized at 1737. Here's the address. You can check that it matches the blockchain. And basically what we've just done is, as a merchant, I've accepted literally a digital cash payment from a customer. Just it happened to be in cello euros. Now,
and maybe to highlight all the elements that were involved. So we had a self-hosted cold wallet, right? Which has the digital assets, which has the private key. We have the point of sales, right, which was literally meant to simplify, the kind of the access for the merchants. And we have a merchant account within a regulated institution and a custody systems that supports all that. So those are kind of the components. And if I will look into my wallet, because that was another question of Valentin, whether actually I see the transaction in my wallet, me as a user, here it is. Here is my transaction. I can see the transaction details, transaction hash. I can also see it on the Explorer if I want to, right? I see it in my transaction history.
Amazing. The phone you had is the phone of the user that also holds the card.
So again, the wallet app, in a case of a card, specifically this card, for example, or this wallet, allows you to see the balances, to initiate transactions, et cetera, but the private key is on the card itself.
Okay. what happens if a user loses his card?
So again, we allow to back up the private key, right?
Mm-hmm.
This is kind of the downside of a unhosted wallet, right? Of a non-custodial.
Yeah, of course.
If you lost the card and if you lost your private key, then it's gone. It's the same way if you've lost your physical wallet with cash in it, right? Then it's unfortunately gone.
But the difference here is if you happen to back up the private key, then sure, you can restore it and then you can continue using it.
Okay, so this is a hybrid approach, right? More or less, like you give custody to trustody, and you host the key on the as I understood HSM provider.
No. So here we have to divide very clearly. We are able to offer either a custodial wallet within, let's say, a financial institution, which is, for example, trustody, or a non-custodial wallet, which is a card. So there is kind of no hybrid here. Kind of me, someone with legal background has to be very black and white. So it's either completely the key management is either completely happens on the user side, or it's been taken care of a regulated institution, because obviously the onboarding process, the compliance processes are very different. You have to do KYC, AML, transaction monitoring, et cetera, et cetera.
Could you use the card with the hosted solution too?
Right. So this is the final part of our presentation. Unfortunately, I won't go all the way because I think our AML department will kill me, or they might not. So let's say I want to, so I'm going to try to send money, right? Let's take an address, maybe Victor, maybe you could share an address I could send this money to. Let's withdraw my 25 cello cents or cello euro cents.
But maybe we can just, so basically, but it's not a card, right? So basically, obviously, you can also have an account with Trustody as a user after all the KYC, ML checks, et cetera, and then use the custody account as a custody account, right? And that's something that is on the roadmap, right? You can later on use the card to authorize transactions from the custody account. But I don't want to kind of, because I think right now is more than enough in terms of tech, to show maybe we can kick off with some questions, or you actually already started.
Yeah, so we have one request here. So Victor, can you show again the machine? Yeah, and the paper. So people are asking to see.
So again, the machine is not really relevant because basically it's an Android point of sales. So how you can see this, so you can see it's an Android.
Think of it as a glorified smartphone with a printer. That's all it really is.
The benefit of this POS, it has a printer. Why do you need a receipt of an on-chain transaction? I don't think you need one. People still like the receipts though, right? But it's literally, it's in the blockchain. So
I can give you what you want the receipt.
But people still like the receipt. They still like kind of to have something in the hands. That's one of the reasons why we use this. But again, for you, we can provide the link, so you can basically just download the app from the Play Store or Apple Store. You can set it up and you can start accepting, digital assets right away. You don't need, and that's kind of one of the big benefits for financial inclusion for a lot of emerging markets, for CBDC use cases. You don't need specialized hardware. So a relatively inexpensive smartphone can be used as a point of sales device.
And that is super amazing. Thank you so much for this presentation. I think it's an amazing product. I actually use it, as you said, on the last DEA meetup. We paid some drinks in a bar, which was a really nice use case. It works, and I'm amazed by the progress you made. So thank you so much for this presentation. Let's open up the discussion for questions. I have more than one question. I don't know about the audience. Tamara, do you want to start, or do we have questions from the audience?
Yes, we have some questions. So the first one, it's about if the user can use the card in any store that accept banking cards, or this is a special one?
So again, it's not Visa or MasterCard, right? So it's literally a hardware wallet where only you have the private keys, right? Or the private keys are on the card, to be precise. So there are a few conditions, so you'll be able to use it. And we're actually working hard on making it acceptable everywhere, right? Obviously, the point of sales devices should be able to support that. This is easier because a lot of newer point of sales devices are switching to Android anyway. The card hardware is actually, it's something that is used in the banking industry. So the card hardware can support Visa and MasterCard applets on it, right? But then the merchant also needs to accept, let's say, crypto as the means of payment, right? So it's the same way if you would want to accept, if you have American Express card, specifically in Germany, you will feel pretty unbanked because not a lot of merchants actually accept American Express, for example, because of the high fees. But we have merchants who already enrolled, right? And now we're working with the large acquiring companies to support it across the entire infrastructure. So yes, the big vision is that you will have your cold wallet, and you'll be able to pay it in every store for goods and services. That's kind of where we're heading to.
Amazing. One question from me about the transaction. You said you added Litecoin in one working day or less. I'm really amazed by this. How does this work? I don't know all the blockchains, but obviously you have this module that sends the data for a transaction, and then somehow on the card basically signs this transaction, or on your HSM signs this transaction. So, but is every blockchain using the same signing mechanism or hashing algorithm, or like how is this possible?
We actually added the Dogecoin a day later, so.
And so Shiba afterwards.
yes. I'll send you some Doge afterwards. So yeah, we're about to troll Elon Musk.
Amazing.
Still dreaming about this in Twitter. You actually can use Doge to pay for coffee or beer, and actually,
But these are our Bitcoin forks, no?
Yeah. Felix.
Yeah.
To give you a little bit of an explanation, right? Most blockchain, so every single blockchain transaction is signed basically is just a digital signature. Mm-hmm. Now, a digital signature is essentially it's specified by the hashing mechanism and the signature mechanism. So, for example, a lot of people hear strange words like SHA-256 with the CBDC. What it really means is that you just take the SHA-256 of whatever transaction you want, and then you apply the ECDSA signature on it. So smart cards enable us to leverage that because they have a mechanism built in which is called sign for pre-computed hash. And essentially you just feed it the hash which is already done, so the SHA-256 part, and it applies the ECDSA part on top of it. With some other blockchains, there were some challenges. One of the biggest challenges was EDDSA, which is unfortunately not supported on smart cards today. But we still got around that. So we've actually written our own software-based implementation of EDDSA for the smart card, and you could sign EDDSA transactions at this point. But the mechanisms are all the same, right? At least the logic in which this is done is the same for all blockchains.
For which blockchain did you have to do this?
So there's a couple of them. We had to look into this for, Jesus Christ, sometimes the name escapes me. I always get these two confused.
We'll do one for
okay, it's not that important actually. But the next question would be ERC20 tokens, NFTs, you support them. We have all this different like vault standards and so staking, lending, like these are all like DeFi DeFi use cases, but they are all transactions, right? So I guess this is pretty simple. You just like take this transaction, sign it on the card, send it to the chain.
Okay. The challenge there is a little different, right? Because when you're transferring, so NFTs are fairly straightforward because there's a standard. So you have like you mentioned, all NFTs are either ERC 721s or 1155s, and it's fairly simple to work with them. Much the same way with the ERC20 tokens because they're standardized. When you're mentioning lending, swapping, and so on, it's a little bit harder to support specifically from the point of view of the user experience, because one of the drawbacks and one of the things why we haven't implemented Wallet Connect yet, for example, is we have the security of the users at heart. And Wallet Connect integrations come with a lot of challenges. One of these challenges is not strictly technical, but let's say you allow any dApp to interact with your wallet. Well, if your dApp happens to be, I don't know, some evil dApp.microsoft.com, it might, well, not .microsoft, I'll make it worse, microsoft.evildApp.com. The user might not understand, you know, they're looking, oh, well, this looks like a legit website. And then that contract ends up taking away all your money. The problem is we can't really decode what data is there for the signature. And this is one of the things that we're working on right now. And when we do the Wallet Connect integration later this month, one of the challenges is going to be we're not going to allow every single app to work with us. We're going to allow a first set of apps which we know are at least more or less secure. The same goes for lending, right? Because if you've sent your money into a contract and that contract is malicious, well, you might never see your money again. And it's a very, so as I mentioned, it's not the signing, it's not just a signing question, but it's also how do you make it accessible for a user? How do you make sure that the user understands what he's doing? And that's one of the things that we keep at heart when we were developing the wallet app. It was basically, how do we make crypto usable for everyone? How do we make it accessible? How do we not change user patterns? And that's why we take this very, very seriously. And a lot of the things that some wallets already have, it takes us a little bit more time to get there, not because it's technically difficult, but because we focus what's going to be the user experience. How are they going to interact with it? And these are, for example, some of the biggest drawbacks I've seen with MetaMask.
Amazing. Thanks. I guess this is a trade-off that you have to do between, security and like overall usability. A good solution to whitelist smart contracts or pages. Amazing. I think we have time for some more questions, right, Tamara?
Yeah, so we have one more here. How do you settle purchases at merchants?
So again, I think the beauty of the system that it can work with different partners, with different regions. Obviously, either the merchant is willing to accept crypto native, right? So this is to just go straight to his account. The account can be also a non-custodial wallet. And that's the part that, again, I like most. So it doesn't require a centralized counterparty to operate because we still have 2.5 billion people unbanked. So we still have 1 billion people who have the ID. We still have like roughly 4 billion people who make less than $5 a day. And they probably will never get an account within a regulated financial institution just because, a lot of those institutions. Yeah. Right. So it kind of enables those consumers and those merchants to transact in the first place digitally. And a lot of them, let's say in Africa or in other regions, are able to accept stable coins and actually use them or even Bitcoin, which I think is a great technology to actually to enable consumers. Or we can plug in a regulated financial institution for the on and off ramping, right? So the merchant, and there again, we have the flexibility to work with different partners in different regions who can then just basically sell crypto and then wire fiat, euro, whatever dollars to the merchant. But this is the part that kind of is a module that we can plug in and out depending on the jurisdiction and on the partner.
Great. Yeah. So since we are almost out of time, I'd like to thank you, Victor and Felix, for the super interesting discussion and ask you to give your closing remarks.
Yeah, I mean, I think we are just at the beginning of something great. I've been in this industry for quite some time, probably as an early adopter, but I still think we're in the very beginning. a lot of use cases are going to happen in the next 3 to 5 years. I hope ours will be one of that. For this year, we actually plan to take, to at least 2 countries fully Web3 native, to enable them with the cards, with the whole Web3 infrastructure, maybe more. Let's see. And I think it's fundamental to have both, to have the self-hosted wallets and hosted wallets as well, as long as the hosted wallets are kept within regulated, legit financial institutions. But I think it's also fundamental to have the freedom to exchange value, without borders, without boundaries of any sorts. And that's something that makes us passionate, to build all the solutions and products. And reach out if you have any questions, if you want to do something together. I mean, we're fairly quick on this side. So literally, sometimes even within 24 hours.
Thank you so much for being here, Felix and Victor. It was a pleasure, and I'm very happy that you provided so much technical information for the Techie Tuesday. I learned HSM, TPM, MPC, and I have to read the Wikipedia articles of this. Custody options. Thanks so much, and especially sorry, Felix. Sorry.
You can ask ChatGPT for help. Might be faster.
Yes, and thanks for pushing the limits of payment devices and bringing crypto to a user base that is used to cards and for a great product.
Thanks a lot.
Thank you.
Bye-bye.
Thank you. Yeah, and a big thank to the audience who participated actively. And if you enjoy this content, please like this video and share it. See you at the next episode of the DEA Tech Tuesday. Bye.
Bye-bye.
Bye.
Ciao.
Ciao.